Hello, everyone, and welcome back to the latest episode of Real Take Real Estate with the Joseph team, where we give you our real take on today's housing market and everything to do with real estate. I'm your host, Maddie Maloney, joined by my co-hosts,
Joe Sambear
and Sam Fada.
So today, we just wanted to go over some of the common questions that we get asked all the time. And like we always say, when you start the home buying process, especially if you're a home buyer, first-time home buyer, there's never going to be a dumb question. This is all new territory, and we get all of the questions, and you just never know until you ask. So today we wanted to go over some of those common questions to just ease the nerves of any first-time home buyers, or just if you have bought a home maybe 20 years ago, it's definitely going to be a little bit different now when you go to purchase a home. So just have some common questions. So the first one that is definitely being asked right now with a little bit of higher rate environment: how soon after I purchase can I refinance my loan?
Well, that one, the common answer would be immediately. And there's always, you can refinance immediately. The only thing you'd have to check on is if it was outside of a conventional conforming loan. There are a few loans, a very small percentage of mortgages in the United States that have a prepayment penalty. And that would be easy to determine from your closing documents when you purchased. We could look at that very easily. It'll be on the payoff as well. I think that's for more exotic loan products that are outside the conventional guidelines.
Yeah, like a balloon mortgage or something non-conforming, because that's another good question. What is there a prepayment penalty? And that's typically with conventional FHA, VA, RD loans, there's not ever going to be a prepayment penalty. Yeah,
that'd be very unusual, but they're still out there. It's very rare. So we'd be able to look at it from your closing documents and answer the question. But
absolutely. But that's also a good question to ask up front as well. When you're getting a loan, obtaining it, is there going to be a prepayment penalty on the certain loan product? So
and that one too, just to double back on that with the how soon can I refinance? With a cash out refinance, there's restrictions as well. So that would be, if you put say 50% down and a few months goes by and you need additional money to put into the home or something along those lines, you just maybe made a little bit of a mistake putting that much down starting off. There is a wait period with that of 6 months to take any additional cash out. And there's a unique restriction for that we may be able to get by, but typically there is a wait period for cash out refinancing.
And if that were the case, we may look to a home equity line of credit or something other than.
So, easy answer, quick answer. You can refinance typically right after, but a couple of different scenarios where you may not be able to, but definitely a good question. And maybe if you're planning on refinancing right after a purchase, or you have plans to, just check in with your lender as soon as you have those thoughts, just to see, is there a time period that I have to wait? Are there any additional fees? Is it going to cost me more right now? Should I wait a little bit? But definitely a good question to ask. Next question we have that we have been getting, especially in a very competitive market, is if I have family that can buy my home in cash to win the deal, can I still get a mortgage afterwards to pay them back? And so we've been getting this more in a competitive market. If people have the option to win the offer, either family members lending them money, maybe they're dipping into inheritance or something like that, are they still able to get a mortgage after the fact? So, Joe, can you go into a little bit about that?
Yeah, I think the key on that is how they hold title. So if they were to do something like this, we'd want to make sure they hold title properly so that we can do a refinance or follow like one of those cash out guidelines that are very specific. So if you do entertain something like this, you definitely want to, even though you're paying cash, you're going to want to talk to your lender in advance and have everything lined up nicely so that we can step in after the transaction and get started with a refinance essentially of the home.
Exactly. There's another unique way to do that as well. You can, because a lot of times if you do purchase it with cash and you do look to do a cash out refinance, you're going to be limited on what amount of money you can actually get back. So you're going to be capped at 80% of that purchase price. So you're not going to be able to get all the money you put back into it because there's not going to be 100% financing option at that time. And another unique way you can do it, if it's truly a family member purchasing it, and you're going to, the end goal is for you to be the homeowner, you can have them purchase it in just their name. And then after closing, they can sell it to you, and then you can finance it up to, 97% in some scenarios. And then if it's a family sale, typically there's a reduction to the transfer tax and everything like that. So again, making sure you chat with us ahead of time to properly structure the transaction, know all of your options, and really go from there.
There's a few other situations too that relate to this. Is every once in a while we'll also see someone take money out of their retirement account. There are some, obviously you have to check with your financial planner. There are some IRAs where you can withdraw the funds, and if you return them within so many days, I think it's like 60 days or
60
less.
days, I think, typically.
It depends on each different regulation and guideline. But if you return it within 60 days, there may not be a tax consequence or a penalty. And so we do see that quite a bit too. Again, you really have to be really careful on that. We have to make sure everything's in line and planned, but that's another one where they paid cash.
Make sure you check
given
with
this
your
market.
financial planner
100%
for that.
and they should be leading the charge on that.
Oh
and
yeah, for
handling
sure.
everything.
For sure.
Definitely. So always make sure you still get with your lender beforehand. We still can do a refinance after the fact if you purchase a house in cash and then come to us, but always better to just have that plan ready beforehand so we can make sure that we can get you closed and let you know of any implications early on. So great question there. All right, so another one, also going along with the competitive housing market. If I'm in a competitive situation and I really want this house, how much can I offer over asking, and what implications would there be with offering a lot over asking price? Sam?
Yeah, so that really depends on how much of a monthly payment you can afford. So if a house is listed at $300,000, but you're qualified up to $350,000, there's no reason you can't necessarily do that. It's just making sure you're working with your real estate agent and knowing that there's good comparable sales out there recently, so you're not overpaying in that sense. But again, we'll do an appraisal on the home and make sure that it appraises for what you're paying for it, and if not, that appraisal gap is a common thing we've seen in this market the last few years because it's so competitive, and that's basically guaranteeing that you'll pay over, if there is an appraisal shortage.
Well, and this is also where the term escalation clause comes into effect, where you have two offers that are competitive, and you put in a very detailed clause into your purchase agreement saying, I'm willing to pay up to $350,000 on a bona fide other offer. So if you see another offer for $335,000, I'm willing to pay $1,000 over that up to $350,000.
X amount.
And so basically you're always comparing this other, is there another offer out there? And that's a way to really protect yourself so you're not negotiating against yourself.
Yeah.
And this is where it really is important to have a good buyer's agent on your behalf, because all these little details in the contract language make a huge difference to you. Instead of just offering, $350,000 because you want it, you can put some other features in to protect you, like the appraisal. Some people waive that with the appraisal gap, but it's definitely more complex in the last few years than it's been.
So if you use that appraisal gap, you're basically saying, I'm going to overpay for it if it doesn't appraise out of it. So that's attractive to sellers. So we've seen a lot of that in the competitive market, but you got to just be ready. Like you said, how much can I offer over asking? How much extra cash are you willing to put into the deal? And that's where we'll paint that worst case scenario picture for our clients to make sure they know what the worst outcome could potentially be.
And I think we found, Sam and Maddie, I think we've seen at this table that you can be really aggressive and try to win over the deal while still protecting yourself. I think that's a common thought is, well, I just have to jump in and just pay this extra amount without any other protections. And I think you can protect yourself and make an extraordinarily competitive offer in the same way.
Especially if you have a buyer's agent that is great and is on your side and is fighting for you, they will make sure that those protections are in place. Because one thing that I've heard from people before is that they were in a really competitive situation. They had been looking for a year, and then they just threw all this money at this house, and then they had buyer's remorse afterwards when they paid over, when the house didn't fully appraise and they paid out of pocket. And that's really what we don't want. We want to set you up for financial success, to be a successful homeowner, and to not have that buyer's remorse. So quick answer is that, you can really offer whatever you want on the house. It's just how much should you offer on this? And your buyer's agent can really help tell you, we think that there's good comparables in this area. I think that we can go up to here and still be safe. And let's put this clause and word it this way so that we stay safe within this deal and that you're not going to have this buyer's remorse afterwards.
And we don't recommend waiving the home inspection.
Never.
No.
Always have a home
if
inspection.
you do waive the home inspection, still have a home inspection just so that you know what you're getting into as well. But that's a whole nother story. If you want to hear more about that, go to our inspection podcast there.
We talked about the raccoons in that one.
I think so.
All right. So next one, very common question as well right now with the rate cuts. If rates go down after I lock, can I get a better rate?
Yes, potentially. It depends, how much the market goes down. So we offer kind of unique to us. Not every lender necessarily offers this type of option, but we have a renegotiation option to where, if you lock in, say right when you get the accepted offer, and then you're not closing for a month, but in 2 weeks, the market, there's some downturn, depending on how much it turns down, we have a one-time option to get with our lock department and, try to renegotiate the rate for you at that time.
And usually that's a situation where it's kind of the whole mortgage industry is dealing with the same issue. So the market has dropped that much where investors are willing to reprice the loan means that rates would have to drop significantly. So we're not talking an eighth, a quarter. We're talking like 0.75, 7/8 type of movement. So it's a very significant movement.
Yeah. So there is protection for that. It's not the end of the world. Typically when you do lock your rate, that ends up being the rate. But if there's large movement, like Joe said, there's potential to get
and for that to happen in a 30-day window, it's happened, but it's once in every few years type movement. So.
Yeah.
But when we look at initially locking in your rate, we're always talking with you and advising you, what the market is doing at that point. We can either float the rate where we wait a little bit to see if rates get better. If we have any knowledge that, hopefully rates will come down soon, and some mortgage economists are, saying that maybe floating the rate is a good option, or we can take the safe option and just lock it in right then. So we're always going to give you the different options. We're going to let you know what the economists are saying at that point, and we'll always try to keep your best interests in mind and, see what the future holds.
Yeah, and it's something we take really seriously. I mean, seriously enough where we've invested a lot of money and time to monitor the market. We pay professional advisors who watch the market all day for us, give us reports every morning. We spend our first cup of coffee very anxious to see what's going on in the world, and we do take it really seriously. We want to put our customers in the best position possible.
We're continually watching the rates, and if we have, an option to say, hey, let's watch this another day, let's watch it day by day, it's improving, we'll keep an eye on it for you. But if it's another direction, we'll advise, let's lock right away. We don't want to gamble with this too much because it is a huge decision. You're going to be paying this mortgage for 20, 30 years in some cases. So definitely something we take seriously and want to always get you the best
And the
deal.
consumer, you get to decide.
Yeah.
Absolutely. All right. Next question, which has become common, especially in Michigan right now for the past 2 years with cannabis becoming legalized. The question is, if I work in the marijuana business, can I get a mortgage?
Yeah, we do have one investor that will, it's a conforming investor. Rates are very competitive on it as well. There's some restrictions that you have to meet. So we do offer those options as little as 3% down on a conventional loan option. So that's something you can give us a call, and on a case-by-case basis, we can definitely take a look at that, and we've done a handful of them through the years. So,
and we're always careful to make sure we're following the regulations and the federal regulations, the compliance, the laws. It's a very regulated area. So that's the first thing we look at. That's why we need more information about what you're actually doing, in the industry, and making sure that it's compliant before we even start.
Definitely. All right. Another one that we get a lot from first-time home buyers. Can I use my credit cards after applying for a mortgage?
Yes and no.
Yeah, it all depends. Yeah, that's a good question there. If you're going to put, $5,000 on your credit card to buy, furniture or new appliances for the new home, that could, jump your minimum credit card payment up from $25 to $225. And if there's, a tight debt to income ratio, that $200 can basically blow the deal if you're adding more debt. So it's really revolving around how much more debt can you add during the process to not qualify you for the loan.
I think one of the easier ways to answer when that question is presented is, one, we would not want you to open new debt. It'd be, you can, but we highly recommend do not open any new cards or new debt during the transaction. Two, I would recommend that if you are any activity you're going to use on your credit card, which is totally fine, be prepared to be able to pay that. So if you're going to use a card to buy a piece of furniture that's $1,500, might be fine. Make sure you have $1,500 if we have to pay that down prior to closing.
Yeah.
Because most lenders will do a soft pull credit check right prior to closing, which will reanalyze all the debt. So I would say, just the general rule of thumb, if you're going to use it, have the funds available to pay it down if you need to.
Or definitely give us a call ahead of time
That's
before
even better.
you do anything like that.
Absolutely. Make sure you do your big celebrations or big purchases after closing. After closing, you can go get all the furniture that you want. You can go celebrate by getting a brand new car, whatever you want. Just after closing, not before. We do not want to hear about that. And, it's not that you just don't tell us about it. It's that we do a soft credit pull. So we will still see it, even if you don't tell us.
And anything we always want to know, change of employment, new credit, new change in financial. We have to be very careful that, because you're going to sign a final application at closing attesting that these things are all accurate. If they're not, it's a huge problem. So we always want to know. We're here to help you and guide you. You don't have to keep things from us. We want to know what's going on, because usually there's a solution. There's always a solution.
Definitely. Awesome. Next question that we get from first-time homebuyers is, are there any incentives for a first-time homebuyer?
Yes, there are. I would say usually that is in the form of, some states and local areas have grants. We've talked about that in previous podcasts. So you'd want to look first where the geographic area you are to see if there's any grants from your city, township, state, housing authority, local housing commission, anything like that. Employer sometimes has grants. So you always want to start with that process. That'd be the first place to start. Next is the incentives. I would say the agencies, Fannie and Freddie, their incentives are more based on lower down payment, better interest rate, better mortgage insurance incentives.
Yeah, and those are a lot of that too. We get that question a lot. Being a first-time home buyers are looking for some sort of incentive, and with that, those programs with Freddie and Fannie have income restrictions. So you can only make so much money to qualify for those programs, and really those programs have a 3% down option, so a reduced down payment, and then reduced interest rate comparatively to whatever the going rate is at that point in time, and that spread can change on a daily basis. Typically it's 1/4 to 0.5% sometimes, and then the monthly PMI rate is reduced as well, so cheaper PMI and a little bit lower interest rate if you fit that income criteria.
So yes, there are incentives for a first-time homebuyer, but just because you're a first-time homebuyer doesn't mean that you will always qualify for these, because they're going to be income-based. Yeah. So if you have a great paying job and you saved up a ton, but your job is a little too good, sometimes you won't qualify. But there's lots of programs and there's lots of options that we can look at. So,
and first-time home buyer is defined as you have not owned a home in the last 3 years. Not that you've never owned a home.
Definitely. All right. Next question. Especially when people are starting the process, about to get pre-qualified, pre-approved, the question is, how does a credit pull impact my credit score?
Well, what we have to define is if it's a hard inquiry or soft inquiry. So hard inquiry, it will show up as an inquiry on your tri-merge credit report. Typically, we do a tri-merge credit report, Equifax, TransUnion, Experian. And when we pull that tri-merge credit report, it will, if we do a hard inquiry, it will have some impact on your score. I believe credit inquiries are like 10% of your total score. And what they're looking for really, and why it has it could have a negative impact, is if you have multiple inquiries over a very short period of time. So if someone's going out and shopping for a mortgage, trying to buy a car, and getting qualified for 10 credit cards, they're at higher risk because from the credit agencies, it appears that there's something going on. Like, why is this individual trying to get all this debt within a short period of time? That's where it has a negative impact, I would say. But if you're just traditionally, okay, I'm checking my score 3 times a year, I looked for a mortgage, 2 months later I looked for an auto, and I had my credit card reauthorized, that would not have a very negative impact to your score. No,
yeah, just the one hard inquiry is not going to kill your score 50 points or anything. Might impact it a couple of points, but it's not, there's that misconception that, oh my gosh, I'm having my credit pulled, my score is going to drop. It's not really that big of an impact.
And, with our borrowers, we typically do just a soft pull up front when we look at getting you pre-approved. So the soft pull, we're still able to get a score. We're still able to see your debts, but it doesn't have that hard hit on your credit. So that's one thing that's really nice that allows people, if they do have any worries about their credit going down because of the hard pull, that's one thing that we can overcome that obstacle. And we say, you know what, we don't do a hard pull up front. We're going to do this soft pull. We can still see what you're going to be qualified for, and you can still go look at homes. And then once you get that accepted offer, at that point, we will do the hard credit pull and start moving forward. There's going to be some programs where we do need to have the hard credit pull up front. But, we always look at that on a case-by-case basis and let you know how it's going to go.
And if something does happen where, it's happened to you in the past where a hard inquiry has impacted, there's other things you can offset it so quickly by paying down debt or just doing something else to quickly offset that.
Yeah, and one thing I think we missed is, if you're shopping around for an auto loan or even a mortgage or credit card or what have you, there's a window with a mortgage for, they'll recognize that you're shopping for a mortgage. So there's a 20-day period where you could have your credit pulled with 3 or 8 different lenders, and your score is only going to be affected as if there was only one hard inquiry. So there's a window.
That's the same for auto too. Yeah. Auto financing as well.
So you're not, you can, if you want to look at 3 different lenders, that's fine. It's only going to count as one hard credit.
But try to do it in the same window.
Try to do it in that same window.
Close to each other.
Exactly.
All right. And then the last question that I have in here that we also get a lot from first-time home buyers is, once that credit is pulled, whether it's soft or hard credit, how long does that last? How long is their pre-approval going to be valid for?
So the pre-approval is valid as long as the credit is valid. And typically a hard inquiry is valid for 120 days most of the time. So 120 days for a conventional loan. You can shop during that whole time, close your mortgage within that whole window without having to have the credit repulled.
Yeah, so really, it's 120 days basically. If we do a soft pull, it's super easy for us to recertify that. If it goes past that time frame, so long as your income or employment or asset situation hasn't changed, then it's typically very easy. We can recertify that pre-approval.
And that's a conversation we have all the time is, when are you looking to buy? I'm definitely going to buy in the next 90 days. Well, there'd be no reason not to do the hard inquiry, get that resolved, because sometimes we do identify issues, and if we do it early enough, there is time to resolve a medical collection, clear up a rental issue that's showing up in your credit report. So.
Definitely. But also, some people get a little worried, maybe they're looking for a second home in Florida or up north where it takes a little bit longer for them to be able to secure a home, and they're worried about all these hard credit pulls if it takes them 1.5 years, 2 years to find it. Well, again, that's where we can come in with the soft credit pull. It's still going to be valid for 120 days, and it's easy for us to recertify it, as Sam said, with just another soft credit pull. So you don't have to be stuck on the, oh my gosh, I got to find a home within 120 days. It's flexible. You can take your time if needed, and we'll help walk you through that process. All right. Awesome. So that was just some common questions to go over for all of our first-time home buyers, people who are going through the home buying process. Again, hopefully that cleared up just some common questions that you might have. So that was it for today's episode of Real Take Real Estate. Thank you so much for joining in and listening to us today. If you liked today's episode, please like, share, or comment on it. Let us know if you have any questions. Don't ever hesitate to reach out to us, and we will catch you next time on Real Take Real Estate with the Joseph team. Thank you so much.